Hey, welcome back. Today I want to share something that I felt that I want to prepare for you. Some insights after I have read Warren Buffett's shareholders annual letter, before his AGM. I think there's a lot of good insights from there. And how can you apply as an investor today? Okay, so let me dive straight into the document itself. So the number one thing that Warren Buffett talked about, of course, is um, what the result of what the company have done. This insight session, right, is not to say whether this is a good company to invest or not. I think that's beside the point. That's not the main thing that I want to discover today. It's more towards of like, if you are going to invest your money, right, a few big lessons that you need to have so that you can be a better investor. Okay, so number one that I want to bring it up to you is really this thing called uh, so you can see from this highlighted section. So PCC is far from my first error of that sort, but it's a big one. Okay, so PCC is what? PCC is basically a company that Warren Buffett made in or bought in 2016. It's a precision cast parts, and he deal with basically the aerospace space industry. And you realize that last year, Warren Buffett exited the whole aerospace industry in itself, and he is not shy to admit his mistake. Right, this is not the first time that Warren Buffett talk about it. Uh, there are many mistakes that he made, and he is not shy about it. But one thing I want you to note is not just the mistake itself and being very transparent, and to review or really do a reflection of why there is such a losses. But you realize that even though he makes such a big mistake, that he said it over here, right? It doesn't really impact his entire portfolio that much, right? Because even though it's 11 billion, the amount of asset that he's managing, right, is a very huge number, which I think we can see it uh, probably below. Let's take a look at it together. So it's about here. So at this moment, the market cap is about 280 billion dollar, right? So it's in million. So 11 billion, probably like not even 10%, which is about 5%. So it tells you a lot then, other than making mistake, right, is to not really put everything in one basket, is to look at how you can bring down your risk by diversifying your portfolio. Because of late I've been talking to many investors, they keep telling me that they want to do this, they want to do that, and it's like a lot of concentration risk. So be mindful of that. uh, and if that particular portfolio is like more than 10% of your entire net worth, right, you really need to be careful about it. Okay, do take note. So number two is over here. This is very important. Why? Because as you know that US and around the world, they are having very low interest rate environment, and at certain location like in Europe and Japan in negative interest rate, what's going to happen is Warren actually said that bonds are not the safest place to be these days, right? He even said that bond yield, which is the interest that bond give you on a year-to-year basis, right? It have fallen, okay, like 94%. It's a huge amount of money since 1981. So you see that the long-term trend for interest rate in terms of bond is actually coming down. And he actually said something. Fixed income investors worldwide, whether pension funds, insurance company, or retiree, face a very bad future ahead. So if you are having a lot of fixed income portfolio, I really want you to really consider, right, or even a dividend portfolio. I think that a lot of the strategies that could be valid or applicable during those days might not be really very practical during this time. So this is a question that you need to ask yourself. If you are holding a lot of fixed income portfolio, be mindful. And it's not from me. We have been telling our investor this like over the last few years already, right? Bond is not the place to be. Why? Because the yield is not going to get higher, or it's going to get lower and lower. And as the fixed income investors, what they are doing at this moment is they're trying to move your fixed income to like junk bonds, which is what we call by non-investment graded bonds. which is very scary, because imagine you are holding junk bonds, which is triple B and below kind of investment graded bonds. You need to be mindful, because these are companies or bonds issuer that might not be able to pay you back. So really understand the kind of bonds that you are holding today. If you remember the 08-09 crisis, right, it's triggered by the Lehman Brothers, the mini bonds. It have destroyed many retirees in Singapore, and many people have lost like six-figure kind of portfolio. And I'm thankful, because 10 years back then, my mom actually asked me, she wanted to actually put a six-figure income money into it, but thankfully I told her that this is not the place to put your money. In the end, she didn't do it, so she didn't lose that six-figure. If you are one of them, you probably know what I'm saying. If not, go and read about it. This is not this is common knowledge, by the way. And the third thing that Warren did was he actually do a lot of buyback. Okay, over here, it's about $25 billion in the process of last year repurchasing. And why he did this, right, is purely because he feel that he actually said that in no way we think that Berkshire shares could be repurchased as simply any price. Right? Means that to him, his own company and the work that he do, he really has so much conviction in it. So he's willing to buy into his own company, right? And he actually emphasized things like he said, our approach is actually the reverse, because a lot of the American CEO has an embarrassing record of devoting more company funds to repurchases when price have risen than when they have tanked. Think of it this way: if the company keep how to say, like buying share when the price is going up, right? It's normal, right? Why? Because the CEO's paycheck is paid purely by the share price of the company, right? So for someone who really believe in the company that they do, if you notice that CEOs or insiders are picking on their own company when the share price is dropping, it is a good sign that they have confidence in a way, right? So do take note. So the approach that he do in today's world is slightly different. So for our investors today, like even for you, the question to you, right, is to always look at the things that you are investing today. Do you understand what you are investing? You know, Warren believes in his business. Why? Because he understands his business, right? He understands the companies that he's investing. And when I talk about investing, right, it's just not share price or stocks that you are holding. It's not the price level you enter in. It is have this perspective of thinking whether will you want to hold companies like this for the next 10 years, 20 years, 30 years and beyond. And Warren have this time horizon. He believed that when he owned a certain company, right, he want to hold it forever. Okay, unless something has shifted, he will actually exit the business, or he will say that he had made a mistake, right? So you need to approach your investment portfolio like this. So even like times where there is correction or market turmoil or market volatility, means price go up and down, especially the downward movement. If you believe that this business is the way to go in the next 10 years, then obviously adding into the position is the best thing that you can do, which is what Warren is trying to show to you based on what he believes in. Okay, so this thing you need to understand, right? Don't let the short-term price movement, right, affect the way you look at the company in the long term. It should be the other way around, right? You are not buying companies purely on price. You are holding into assets that can grow and have intrinsic value over the long haul. Okay. Next. Okay. Another thing that Warren talked about a lot, right? Last year he actually said, never bet against the American or the America, which means the American economy in itself. And again, he's still saying this at this time, right? Do not bet against America. I mean, for me, most of my portfolio is in US also, and likewise, I really see the long-term outlook of US is likely to be very positive over the long run. And I'm not talking about, in the next 4 years, 5 years, 10 years. So I'm talking about 50 and 100 years and beyond, right? There is a lot of fundamental things that US has, and a lot of country like, I don't want to mention which country might not have, right? But if you want to have that conversation with me, I would love to share more with you. Okay, so he have a true belief that US is the place to make money. Likewise for me. Okay, and over here, Charlie and him have an extreme averse to permanent loss of capital, and that we would not have accepted their money, which is investors' money, unless we expect to do reasonably well with it, right? I think of it this way: why will they say things like this? Like he has an extreme averse, which is precisely I keep reminding you again and again, right? The two rules for Warren is what? Never lose money and never forget rule number one. There is the extreme averse to permanent loss of capital. That's why when you're investing, right, you need to diversify and not have concentration risk. Okay. And the next thing is that over time, you need to build conviction, right? That's why they are able to really manage money over the last 50 over years. Berkshire started at 1965, the same year as Singapore has been around, right? They have been investing people's money for the last 56 years, right? And that's why they have so much conviction, because when they invest for long term, and many of their business really succeeded very well, like beyond 20, 30, and 40, and 50 even years, right? So invest in company like this. And to him, right, it's not just a corporation, right? Berkshire Hathaway is not just a corporation. I think their attitude is partnership, which is the same attitude I have with my investor, with you, the YouTube community, and even the IG community. I think I want to see this as a partnership. I hope that you support me in this journey. I mean, by liking, sharing, and following me throughout this journey of mine. Constantly ask me questions so that I can help you. And while you ask me questions, you are going to help me by internalizing the way I think about investment. So I want your help, and let's go with this partnership in the long run. And the next thing that he actually look at a lot of time, right? He actually say the business that he invests in, right, is basically to potential customer must be consistent with what they have found upon entering your premises. So basically, it's the same. Why I'm sharing this is very simple. Warren built so much conviction, right? He will invest in his own asset that he put his investors' money into. Why for me? Many times when I do my own investment, right, I will actually show and share with you the rationale why I buy certain assets or investment. Because I think transparency and alignment and accountability is very important for me. Because without transparency, the business that we are in is very tricky, right? Because they might create a lot of doubt between the investor and even for me, which is the consultant that is managing your money, right? And one biggest takeaway you need to take this, right? So it's a joke by him over here. Indeed, a patient and level-headed monkey, okay, who constructs a portfolio by throwing 50 darts at a board listing all of the S&P 500 will over time enjoy dividends and capital gains just as much as it never gets tempted to make changes in its origin selection, right? Do you see very clearly? Okay, when the market is going up and down, when there is crisis in 2020, right? You realize that Warren Buffett keeps saying, you just need to be patient. Okay, he's a clear example. He has been investing ever since at the age of 11, and this year he's turning 91 in August. You see that it's a joke, right? He actually say that, if you are patient and level-headed. What's level-headed? Means you are rational, right? You think of investment as rational as you can be. I think that's very important. And of all the animal, right, you see that he actually choose the one that is the most impatient, which is monkey, right? And can you imagine, like you purely, invest in company that you have conviction and you don't change it at all, don't never get tempted, right? You never get tempted, right? How do you stop being tempted? Because if you're trading, investing like trading, right? Like every day look at it, market go up 10%, down 5%, etc., etc. And you'll be tempted to make changes. You are tempted to take profit. You are tempted to exit the position prematurely. Can you imagine, will Warren Buffett grow his company? Okay, question. I really don't know. Okay, so these are the two. I think this is like one of the G's that you can get it other than the bonds in itself. And another business that they say, right, they are very good in fixed income ownership, but over the years, right, they realize that the best result, right, occurs at companies that require minimum assets to conduct high margin businesses and offer goods and services, right, that will expand their sales volume with only minimum needs for additional capital. So take a moment for this. Which industry he is referring to? Okay, which industry he is referring to? Okay, it's a very good example over here, which I'm going to show you. So the particular industry that he is referring to, right, is actually the technology sector. Okay, why I say technology? If you do not know some history about, okay, I'm going to like go and find it. Okay, over here. No, this is page 6. You realize that late 2016, right? Okay, he started to go into Apple, and if you do not know, the cost of it is about $36 billion. But do you know that after 2016 until today, which is about 5 years time, right, how much of that money have grown? Okay, sorry for being up and down. So Apple is over here, about 31 billion. Do you realize that the market value is actually 4 times of it, 120 billion? Right? And the tech company over here is one of the largest portfolio for him, which is the big 4. Okay, one is the railway, and then this company, and another one is the energy. So do take note of it, right? So that's why I want to share at this time where, you know, many years ago, right, Warren wasn't very keen in investing technology during the 2000 tech bubble, right? Many have accused him of being stupid, why he didn't invest in technology. Until when the technology bubble started to burst, everyone think that he's an expert, right? But he wasn't really an expert because he did not know that there will be a bubble and the bubble will burst. The reason why he didn't go into it is purely because he don't understand the business. He don't understand how the business make money, and he cannot understand it. He cannot see how the business model is for the business to generate cash flow. He just do not want to put money into it. So I want to take this moment, right, to really let you understand when you are investing in companies, do not just look at the profit or the loss or the revenue or the sales. Do look at the cash flow statement, right? Is the business generating cash flow? A lot of tech companies today are not generating cash flow. Why? Because they are getting listed to get investors' money to grow their market cap in the current market. So I will be very careful if you want to invest in such company. Okay, so there are some things that I want to tell you. So invest in cash flow positive businesses. Okay. Another one he talked about is BHE. So BHE is an energy company that is, I think, 90% owned by Buffett, and they are very determined, right, to be a greener energy provider. Okay, so this is something that the whole world is talking about, which is ESG. Means the world is going into this Green Deal movement, right? Like I think in US it's like 2030, Europe is 2040, China is 2060. I mean, there's so many years, right? At least in the next 10, 20, 30 years, right? The green technology or green energy movement will be there. So do take note that these are the newer trends that we are really talking about. And when it comes to BHE, right, just some understanding of it is that BHE used to be about 122 million. And over the last 20 years, right, 21 years, they grew to be a 3.4 billion kind of asset. So do you realize that when you invest in company, you need to be patient and level-headed, right? Do not get get too disturbed about how price is moving, because when you are doing your analysis, when you are doing your research and your due diligence and really understand the business, right, understand how it works, understand whether can you invest in a company for the next 10 years. If you cannot say yes to that particular question, what's going to happen that in the day or months that you put your money into, right, every day you are going to go through this roller coaster ride emotionally, which is not the way to invest your money. right? There are better way to invest your money. If you want to find out the better way to invest your money, I mean, do have this conversation with me, and I would love to be part of that journey. So thank you for watching this video, and do help me to support my journey. Likewise, like, share, and follow my channel. Okay, bye bye.